We're back with the mortgage group, and this is a topic that everybody loves, including myself. We have a new presidency in place. Everybody knows that affects the market. We see things going up and down. I think in particular, we want to start with what is the status? Anybody can answer. What is the status of the current market right now in Miami? What is it that you guys are seeing?
Go ahead.
Well, great question, Eddie. And we're actually seeing a shift not only locally, but nationwide as well. And we're entering into a really, really nice buyer's market. For those who don't know what that means is that now the buyers hold the majority of the cards in their hands, right? They have a lot more negotiating power when making an offer on a property, right? They have a lot more options on how to structure that deal, where before they couldn't. During COVID, a few years ago, there was 20, 30 people lining up on open houses making offers on property.
That's crazy.
So you have to be very competitive. Sometimes if you didn't have a cash offer or if you weren't offering 20, 30K above asking, you weren't going to get the house under contract, right? Now it's a different ballgame, right? The market is correcting itself a little bit, right? Due to high interest rates, high housing prices. We are living through an affordability crisis. And that's ultimately opening up the buyer's market. So it's going to be a nice little period of time now where if you are looking to buy your first house or an investment property, you're going to have a nice little window to make that happen.
But is it because a lot of people are selling, or is it because they're moving out of the state, or is there more development, there's more supply? What do you...
It's a combination of everything, right? So not only are a lot of people deciding to upgrade their homes or move into something a little bit bigger, we're also seeing an influx of domestic migration out of Miami-Dade County. So there's a lot of people that came here, let's say during COVID when they had remote jobs, and now they're being forced to go back into the office. So you're seeing them list their properties and leave, right? Which opens up the market. Alongside that, you have a lot of new developments, right? Every other corner you see another high-rise condo coming in with like another 100, 200 units, right? So there is a lot more demand coming into play, right? But yeah, a lot of it is driven by affordability factors. Property taxes are extremely high, and they're usually tied with purchase price, right? Insurance is also through the roof. So a lot of the times it's just becoming unaffordable for the locals that have been here for their whole lives, right? And we're seeing, unfortunately, them move out.
That's a good point. And you guys, Cam, that you see from the majority of deals that you guys are making right now, what area in Miami do you think is growing the most, where there's the most development and people are actually willing to move there? Because I know last time we talked about Homestead. There's a lot of development there. But are people more eager to move down there, or where people want to kind of like situate themselves?
I'm helping a lot more people north, outside of Miami-Dade. Oh, wow. So direct that question to Brian. But there's a lot of movement of people buying in Cape Coral, Fort Myers, and that area is a little bit saturated, and it gives a lot of good opportunity for consumers to consider whether it's an investment or first-time home that they can buy up there. There's a lot of inventory, so they can negotiate on getting a really good deal.
So a lot of people from Miami are moving up north.
Yeah.
Right. I was talking to Justin. I was talking to your mom about that. And she was saying that they're looking to invest up there.
Yeah,
you know?
It's a lot of good opportunity, a lot of new build. So builders are hanging on to inventory that they're hemorrhaging money, and they'll definitely be willing to part with it at a good concession. So,
yeah, homes are a lot cheaper up there.
Yeah.
Taxes are a lot cheaper.
There's an adjustment.
I have a client that's pre-approved now. I'm buying in Ocala a $215,000 house, fully renovated.
Nice.
And the taxes are less than $3,000 a year. I mean, that mortgage is under $2,000, so you can't find that down here in Miami.
And that's for an investment or for them to move in?
For them, primary.
Oh, wow.
Yeah, he works as a truck driver, so he's all over the place. So he's not really situated down here in Miami-Dade, and it's, I saw that, and I was like, wow, I don't see that down here.
I pre-approved someone in Fort Myers for $250 on a 3.2, and it's nice.
Do you think that Miami will ever get back to those numbers?
Probably not.
Probably not.
No, definitely not.
Nah, right? That'd have to be like a hardcore, like...
We're talking COVID /
crisis.
Unfortunately 9/11 situation where there's a massive influx, reversal.
Everybody wants to move here. Weather, the nightlife, everything, the opportunity.
If you compare Miami with big metropolitan cities, I'll give you an example: New York, San Francisco, LA, Chicago. We're still relatively well priced. So, and the Miami market, it's difficult to segmentate it as a whole market because there's a luxury market and then there's the regular market as well, right? You can't compare the luxury market with like the regular locals that are living here, right? Because in my opinion, that luxury market, the Coral Gables, the Coconut Groves, the Brickles of the world are going to continue skyrocketing, right? Because that demand has not slowed down whatsoever.
Yeah.
Where we're seeing a little bit of stabilization is the more, I guess, suburban areas where the locals are living, right?
Yeah.
And again, that might be something short-lived, right? In the long term, there's no indication that home prices are really ever gonna see a steep decrease here.
Yeah. Well, no, I mean, we're in Coral Gables, and with every news that like another Fortune 500 company comes in here, you know, you got FIFA, it's gonna be here for 4 years down the street. You got Apple, you got Amazon, you got Ryder. I mean, they were here before in the area, but you have these massive companies coming here, and what's going to happen? They bring good salaries, good payrolls, and those people need properties, so everything around here is just skyrocketed.
Yeah.
It's been like, you know, that dream of, hey, one day I want to live in the canopy in Coral Gables and stuff like that. So you got to work real hard to get there.
yeah.
Like, you got to punch that ticket. You got to put a lot of hours in, man.
Oh yeah.
Yeah, property taxes here alone are extremely high. I'm helping somebody now. She's under contract, buying a house on 97th and between Bird and Coral Way, and the property taxes are $16,000.
$16,000.
And that's before she takes ownership, right?
Correct. So it'll go up until she applies for homestead.
Yeah.
60.
Wow.
And I saw that. I was like, my goodness gracious.
At least it's City Beautiful.
Yeah.
It's very meticulous.
I actually helped a doctor. At this point, it's been like a little bit over 4 years. A couple blocks off of Biltmore, the actual Biltmore.
Yeah, it's beautiful.
They bought a single family house there, like almost a half an acre lot. Beautiful house, beautiful pool in the backyard. And I was actually having a conversation with them the other day, and funny enough, they've made more money on the property appreciating than they have on their salary and their doctor, right? So I think they bought the property at like $4 million, and now it's worth like $13 million in a matter of like I think it hasn't even been like 5 years yet. So you see that appreciation, right? And I don't think that market within itself is going to stop anytime soon, right? So.
No, this is a hot city right now, especially when they had the article that came out that next to the new Beverly Hills. Everything built up here. All those places. There was like, even right after COVID on Miracle Mile, a lot of those retail and businesses where they were closed, there was nothing there. Now it's slammed.
Yeah.
The city's thriving now.
Yeah, and again, we're filming this podcast right now in March, right? And this past weekend, we had
technically it's April 2nd.
Oh, it's April.
Oh, yeah.
April 2nd.
Well, we had
Well,
yesterday was April Fool's. Today is
but today's supposed to be what's it that Trump is saying?
The tariff day.
Yeah, the tariff day.
Oh, it is today. You're right.
I don't know, some crazy stuff.
But well, in March of this year, we had the Miami Open, we had Miami Music Week, right?
Ultra
so
last week.
We had so many events happening, and you feel like every weekend there's something new happening in Miami-Dade.
Yeah.
And that's just going to continue driving people wanting to come here, right? And we're definitely the talk of the country.
I have a good for any of you. I know you guys are like on the front lines, talking to the customers. You know, people are buying homes here, coming from. What is that people usually look forward to? Because a lot of locals say Miami's not like a good place to raise a family. When people are coming in, what is it they usually are looking for? What are they happy about? You know, is it because there's a lot of events in the city, or the weather? Or?
I think the number one thing is weather. And we got a lot of people from up north. So, for example, we're meeting today with a representative from one of the lenders we use, and he lives in Michigan. So he's like, I cannot wait to go down to Miami and get some 80-degree weather.
Yeah.
So just the weather alone brings a lot of people down here. Think about it. When it's cold here, it's 60 degrees?
Yeah.
That's a beautiful day here. No cloud in the sky.
Yeah,
so
we take it for granted sometimes, you know?
Yeah. We're locals, and I barely go to the beach. And everybody that comes down or moves here, comes here on vacation, the first thing they want to do is go to the beach.
Yeah.
So.
And you mentioned it a little bit earlier, right, about a lot of businesses coming to South Florida, Miami specific, right? Big thing that isn't talked about enough is the political stance of not only our city but our state, right? Yeah. Which is driving a lot of business here, right? So yeah, you got the perfect weather, you got the beaches, right? But for businessmen and businesswomen, it makes a lot of sense to come to Miami, come to Florida, right? Because you're checking a lot of boxes.
Yeah, I feel like back then, it was like if you can make it in New York, you can make it anywhere. Which still respect to New York, bro. But I think if you can make it in Miami, bro, you can make it anywhere.
Very true.
Like, this place is like, really booms.
Yeah, a lot of entrepreneurs, a lot of everything.
Yeah, you need to have 2 or 3 hustle jobs. You need to be doing a couple things.
Yeah. What's the saying? You gotta have you have to
have a full-time job and do a little bit of fraud on the side.
A little bit of crooked stuff on the side. Not that we do that, but
Yeah.
No, not at all. We're not promoting that.
But yeah, this is a city where, and there's the opportunity exists. Like, there's always something for you to do something. You know, like people in this city like to move. You know, they like to get things done.
I've noticed that. So I have family in Texas, so I go see them once a year or twice a year, and I just the way people are there, very chill, relaxed, laid back. Here, everybody's moving at 100 miles an hour. Maybe it's the Cuban coffee. I don't know, but I feel like here you have to have chipa, you know, to get moving.
Shout out to Gables Cafe for the Cuban coffee, Steve. We love you. On that point, though, right? Obviously, you know, I have a lot of friends, and you know, myself included, and I'm always like, you know, people ask me, you know, should I invest into this or have money for this, etc. Are there any good opportunities right there now in the streets for like investment into like the typical fix and flip? Like, do you see those out there or not really? If you do, is there any opportunities for like an investment type loan?
Sure. So there's a lot of opportunity, but you have to do the research, the legwork. And we have outlets to help you out with the fix and flips, and we've actually procured a lot of good lenders to help you out with that. But it takes time.
So there's specific lenders for fix and flips?
Oh, 100%.
How does it,
I actually found 2 new ones.
What's like a typical? How does a typical fix and flip lending work?
Essentially, they'll take the value of the existing home and then based off the neighborhood, and they'll give it an ARV value of what it'll be after it's completed. They'll lend up to maybe 80% of the construction. So you'll have to provide a bunch of documentation to get it, but you have to do the research and the legwork to find the property, you know, so that's going to take time.
But let's say you find the property, right? I find the property, I want to do this. I call you. What's the next step?
Some of the banks want you to have. Sorry, didn't mean to interrupt.
No. So what's the next step? I apply. We got to get an appraisal, or what? Like, guide me through like the time.
You gotta have a general contractor, subcontractors. Okay. Unless you're doing the heavy lifting yourself, there are banks that will give you experience or no experience options. So if this is your full-time job, give us a call. We have those options. If you don't, we can still help you out with that. So there's a whole process. You got to get blueprints, architectural plans, designs, you know, and
before
permits.
Even submitting for the loan. Like, you need that to submit for the loan.
Well, the bank that we're going to be going to is going to require that information. Gotcha. So most of these people that are looking to do that type of renovation have that already going, or will be putting those pieces on the board.
But let's say I'm talking to a guy, he's selling to me. I want to get pre-approved with a loan like that. I got to do all that work prior to even telling him, I'm going to get
because the bank wants to know that.
Gotcha. Yeah. And how long does that work usually take? Like, getting plans and everything could take like 2 weeks.
Yeah. 2 months. I have a guy that reached out to me a few months ago that I worked with in 22 at a prior bank that I worked at. We were doing a renovation loan at the time. And when he reached out to him, I was like, hey, I can't believe you're calling me. He's like, yeah, we finally got everything. This is 3 years. And he finally called me, and we're working through a loan right now where he got everything is approved. He's got architectural plans. He's got the construction schedule, payout times, and he's only waiting on the sewer permit from the city, and it's in South Miami. The property will be appraised up after completion. He's doing a tear down and adding at least 2,000 square feet, and that thing's going to appraise once it's done for almost $2 million.
But don't you take the risk of, in those 3 years, somebody else comes and just buys it?
He owns the property free and clear. This particular scenario, he owns.
That makes sense.
To add to a little bit about that, because we do work with investors all the time, right? And a good seasoned investor, what they like to do is piggyback off the assets they already have, right? So a lot of the times these fix and flip loans could become a little bit of a headache sometimes, like you mentioned, getting all these permits before you even like have the ability to go in there and make the
an agreement
yourselves. Exactly. But like a lot of people, like for example, I was dealing with an investor the other day. They have a 10 property portfolio and they're looking to buy property to fix and flip. But what they're doing is they're leveraging their other properties, getting a HELOC, getting cash out from the other properties so they can leverage those funds to make the changes, buy the property, do the fix and flip without really having to put a lien or make it a little bit more difficult for them on that new purchase. So,
do you guys have the ability, or is this maybe something down the line? You guys can like organize a fund like, and get investors in and then pitch to buy like big properties? Is that something that you guys want to like look into down the line?
That would be fun, yes. But that would be something we'd have to discuss as a group and figure out the.
Like, get a couple investors,
Of
$100
course,
grand, $50
of course.
grand, $20 grand, and then buy a.
Do you want to be investor? It sounds like you want to be an investor.
Yeah, it's a different venture, but it's something for sure we've considered, right? And a lot of people.
I feel like that's what's happening a lot right now.
Yeah. Yeah, and the conversation has actually come up with us in the past, right? We're in the middle of tax season right now, so we're dealing with the endless tax liabilities, right? And options that we have in front of us. And one of the main things that people undervalue a lot of the times is when you own real estate, you have a lot more options to reduce your tax liability and your tax hit, right? So definitely for sure a venture that we're looking into.
Or you buy a $6,000 weight vehicle.
Yeah. Or an EV.
And you write it off.
Yes.
All right. I wanted to get your thoughts. So recently, and I talked to Cam about this a little bit earlier. I think maybe Brian's the better one to ask for this. Well, Manny can step in. ONX Homes. I had ONX Homes. I had them on the pod.
Yeah.
Great people. Great product. I mean, from what I saw with them, and I speaking to Lady, I think it's. I don't think there's a lot of other companies that are doing like that.
Very unique.
I wanted to ask your personal opinion. Have you been to the property? Have you seen them in person, anything like that?
I have not. I actually would like to look at it because from the way they structure the property, it's very different than any other home builders right now.
Do you guys wanted to get like your opinion on that format of construction? Is there any? Have you heard complaints about it? Have you heard good things about it? Or
no?
Well, new construction is an animal within its own, right? And I personally love what they're doing, right? And they're, in my opinion, making owning a home more affordable, right? So I think the main issue right now is location, right? And where is it that like these homes are being built, right? And a lot of people are being pushed a little bit more south, more west, more north, right? Because
there's no room.
Yeah, there's no room. Yeah, and that's where they could afford, right? So I think it's for sure revolutionary. It takes a lot of the legwork out of it because I know they do a lot of the, I guess, pre-construction work elsewhere, off-site or whatever, right? And ultimately, I think it's going to help drive down the affordability crisis.
Have you guys done any loans for them, or they have their own people?
They have their own people.
More than likely, they probably have their own mortgage that does for them. Obviously, we always are an option just in case. But I think the way they do it, they'll have the homes ready sooner for people, in my opinion, because that's one of the things with new construction or pre-construction. You have to wait until the house is done. My home was pre-construction. I had to wait 5 to 6 months for it to be done. Sometimes they extend it a little bit more, depending on permits, et cetera, et cetera. But I feel like the way they're building it, you probably wouldn't have that issue. Again, I don't know. I don't have personal experience, or I've heard anybody that's bought there yet. But the way they structure it is unique, and I'm pretty interested in what they're doing.
Brian, I know you went through a process of getting a pre-construction home. There's a lot of developments out there in the city. Can you guide us on the pros and cons of pre-construction, a little bit of the timelines? How much do you need? How much of a down payment do you usually need, etc.?
So for me, I'll go through the pros, and if you guys have any cons that you want to add to that, go ahead. I bought through Lennar, so for me, it was the closing cost help that they always give you. They're always going to give you closing cost help no matter what. So that's a huge pro for somebody that needs that to buy a house in the $400,000 or $500,000 to lower their cost 10, 15 grand, maybe more.
Wow.
They even allow you to use that to lower your rate under what the market is. So whatever the rates are now, you'll be able to get a rate of something under than what it currently is now. You're getting a brand new home. Insurance is going to be a lot cheaper. It's a brand new house. You know, I look at insurances for single family homes, and they're double, sometimes triple than what I'm paying because they're a lot older. So getting a new construction house, you're going to lower your insurance on that as well. But
I was going to ask you, is it because, do you think you got the deal because you know about the industry, or is it like just standard?
No, I mean, they're going to go through the same qualifications as a regular mortgage. Actually, they do more cookie cutter stuff. So if there's things that they don't like, it's going to be a lot harder to get approved through themselves. They do give you the opportunity to have a plan B to lay back on, but they basically want a W-2 client with hourly or salary, something very easy. They don't think outside the box like we do. So that is a con that you could say.
But nobody can go through you to get they have their own people and that's it.
No, they can go through us.
Okay, good.
And then if they can't approve it, they sometimes, not always, give you the opportunity. Like, look, hey, if you can get a loan somewhere else, we'll still give you the closing cost credit as long as you still qualify.
And what do you usually need as a down payment? Like, how does the pay schedule work in the beginning? Let's say the property is going to be done in 3 years. Do I start with $10,000 down and then 5%?
You do a deposit. You do a deposit only, a deposit so they can hold the house, and that's basically as your house. You can go see it as they construct it, and then you just put the rest down after that. But you'll go through an FHA or conventional loan, whatever it is that you qualify. But they won't do non-QM loans, which will be bank statements, profit and loss, which are the other options for self-employed clients.
What's the typical deposit that you need in order to?
I think I put 10,000.
10,000. Okay.
But sometimes I'll do 5 or 10. But that 10,000 deposit gets applied to your closing costs. So
Okay, good.
they reduce whatever your final number is by those $10,000.
And I believe the $5,000 to $10,000 deposit is based off of the length of time till completion. So if it's like at the infancy, you'll pay $5,000. If it's somewhere in the middle, you'll pay like $10,000.
Yeah, 10. I was when
You
I
said you were waiting 5 months.
for 4 months. I think I put the deposit in October and I closed end of February. But a con to that is, your closing date is February 6th, let's say. I didn't close till the 21st. They delayed it an extra 2 weeks. We're not done yet. We haven't gotten the permits to the state, So don't think that the closing date they give you is going to be your closing date. Always kind of be aware that it might extend it.
Now, the other situation I heard, a bad scenario, something happened with somebody who had pre-construction, was that they had adjusted the price of the property because it had an X amount of years. Is that even like legal?
That didn't happen to me.
I was surprised about. I was like, how?
You're saying they adjusted the price up?
Yeah. Was it the price? Yeah, the price had like a price adjustment because when they initially made the deal, time passed by and like construction costs went up, etc. And he said they made a price adjustment at the end.
That makes sense, but I would not agree with that. But I would see them doing something like that. And the problem is there's a lot of people lined up to purchase. So if this person says, no, okay, don't worry, we have somebody else already waiting in line.
Yeah, it seems like that's more of a contractual issue, which is, again, super important. We tell everyone this. It's crucial that you read over the contract and make sure you know what you're signing, or give it an expert so you know. Another con that a lot of these pre-construction homes have.
To that point, right? When I have a contract, right? Because this is important. And I have a contract, and I'm walking with a mortgage broker, and maybe I feel like he's doing cookie cutter. Can I call you guys and be like, hey, just review this for me? Do you guys do something?
We'll do a free analysis, and whether you go with them or come with us, that's what we're here for, is to help and give you the right guidance. Because a lot of people walk into these Lennar, or I don't want to mention any names, but these pre-construction places, and you're just dealing with a representative, right? That works for the company. They don't know the nuances, and you're just an individual trying to buy a house. They're gonna walk you down the wrong path, in my opinion. So a lot of people end up getting in a bad situation, and then they'll lose their deposits or they'll cancel.
And to add to that, I always encourage my clients, if they want to shop around, to go ahead and do that. Just because I'm confident of the services I'm giving and the rate that we're offering. And I always tell them, if you want to get a second opinion, do it. You can always send that estimate to me, and if I think it's a better deal, I'll tell you to take it. I'll be the first one to take it. I'd rather lose that client than lose my reputation over trying to take a loan.
That's a good thing.
Yeah, another like one last thing on these pre-construction or like new builds is the HOA and the CDD costs, right? So
the CDD is a huge.
So
CDD.
It's a tax. You want to go for it. It's a tax that the builder passes on to the consumer. That's on for the entirety of the loan. So whether
30 years.
Wow.
So,
yeah, because it's a cost savings for the builder to pass it to Manny, than to absorb it and pay it himself. So he agrees with the city. I'll build this area, and the city's going to want an excise tax, and they pass it to the consumer. Mm-hmm. So in addition,
obviously it's legal.
Oh yeah.
Can I negotiate
in addition,
that?
no.
Oh.
I have it.
It's in addition to principal, interest, taxes, and insurance. If you have flood and an HOA, now you have a CDD. So you're literally paying 7 items on your mortgage.
But that's crazy, because I feel like the developer is the one that gets the credit of, we're bringing X amount of tax dollars into this area,
The city's
and
still
passing it down to the consumer.
Where people people want their money, and whether it's the city or whatnot, someone's got to pay it.
Which is, again, it's very important. This isn't something that they put out there, right, for local knowledge. It's kind of like window shopping at that point, because you're looking at something, and then when your property taxes get reassessed the following year, you notice something that I guess wasn't really talked about before, right? But these are all things that you need to be aware of before making that jump.
And always think about it.
How much is the CDD?
it ranges.
For example, I think in Brian's neighborhood, they go anywhere between $2,500 to $3,000.
Yeah, it's like $3,500 added to my tax bill. So my tax bill from when I bought to now is doubled already, and I've been there 4 years now. And what I always tell people, if it has an HOA, it's gonna go up. It's not gonna go down. So you're gonna start at a low amount, and gradually every year they're gonna add expenses.
I'm the president of my association, and I don't let them raise nothing, bro. I tell them
not everybody's like you.
Pay $144.
But are you
I
guys...
started at $75, but
Never,
I'll
bro.
give them the benefit of the doubt. When I first moved in there was no clubhouse, no pool. They built that while I was in there. So once it was completed, no, but it's now at $247.
$240?
Have you used the clubhouse or the pool?
I use a clubhouse a couple times. The pool I haven't gone yet. Now I'm gonna start using it because of the.
You're paying
Yeah, there's nothing. Yeah,
They have a security guard that's driving around.
You have
So
a gate community?
no gate,
No
but
gate,
there's
yeah,
a security that drives around from 6 p.m. to 6 a.m.
Bro, we have lake maintenance. We have a lot of green area. We have a clubhouse. And we have a gated community.
Oh,
right?
gated, nice.
And we pay $144.
That's not.
As I recommend, they asked me once to raise $1, and I said no. We're cutting from something. We're not raising $1. Nobody, bro, because I know how it is. You know,
It's a single family house?
It's a townhouse community. Catalonia Lake.
If you
Villas.
ever leave there, they're gonna.
Yeah, I know. They tried already. They tried to raise it $20-something. We're right now, but we're cutting. We're cutting something. We gotta negotiate with somebody.
That's another bright spot of our local politicians, that they're putting some rules and regulations that should have been placed a long time ago.
You know what?
HOA boards.
I want to ask you about that. There's a lot of rules in place now that are coming onto the HOA boards, and I myself, being a president of my association, have had to sign several documents, and you can tell they're increasing security and protection for the consumer. Can you talk a little bit about that?
Yeah. So I think the HOA conversation is twofold, I guess. One is for condos, because the condo community itself is going through havoc right now. I'm sure you remember Surfside when that happened a couple years ago. Politicians had to step in place and build out a whole bunch of new regulations that should have been, again, placed a long time ago, right? To make sure everything was in order there, to make sure that the buildings were structurally sound and you were keeping enough reserves ready to go, right? From the financing perspective, for a condo building that didn't have their marbles in order with their finances, made financing that property or a unit in that building basically impossible for a lot of consumers, right? Now we're seeing the tide turn, right, where a lot of condos and HOAs are now, believe it or not, legally binded to keep X amount of reserves in their HOA accounts to make sure that they're ready to go, which is making financing a lot easier, right? So I think that we are now turning the page. A lot of homeowners and condo owners in the short run are feeling these effects by higher HOA prices, but that's just because they're kind of playing catch up, right, for things that the board and the HOA hasn't been doing for several years, right? So you're feeling the grunt of it in the short term, but in the long term, it's going to be beneficial.
Is there anything where those board members can go to jail for what they do?
I think they have
seen half of Miami's HOA people go to jail.
I haven't seen news about
Hammocks.
Oh my
the
God.
one in Hammocks.
Hammocks is the only one I saw.
Yeah,
No, there's a
absolutely.
bunch of that coming down.
Yeah?
Yeah, get off your board, guy.
Damn, bro.
Yeah, I've seen a lot
But
of
I'll
people.
be on the board is like a liability.
It is, absolutely.
Well, if you're doing-
I mean,
No,
if
yeah.
you're doing
If you're doing what we were talking about, a little fraud on the side.
Yeah. I mean,
gonna
these
get
people
caught.
are funneling money into their own accounts from the HOA account. Yeah.
And they got away for.
asinine.
Yes,
Like,
100%.
you're
I
gonna
agree.
get caught.
Yes,
How are you
it's a
gonna
matter
get
of
from that?
time. Yes.
You know, if you tell a landscaper to charge $1,800 when he's charging you $1,200, you get cash. That's a different story. You know.
Wait, what are you talking about?
No, you know how it works here, bro. You know.
Bro, yeah.
But bro, you know what? I use that to negotiate with my people. I say, yeah, what can you do? And then he says, oh, yeah, and I'm like, take that off the bill and just submit it. And he's like, oh, okay, cool, no problem, you know.
Yeah, and one of the new regulations that passed due to this whole Surfside collapse thing was that now HOA board members could be held
Accountable.
financially accountable, right? And you could.
I mean, they deferred maintenance.
Yeah.
That's one of the main reasons as why the building collapsed. Is every time they're like, "Oh, we need to fix X, Y, or Z," everyone's like, "No,
Because it would cost money.
Yeah.
So like,
But now associations don't have that opportunity. If your building is 10, 20, 30, 40 years, it needs to be certified every so often. Yeah. So
it's something called the structural reserve study that is now being done for the older properties, right? But it's very important because not only for the safety and for the people there, but for the value of the asset, right? Because if not, you have deferred maintenance. At that point, the property value itself is going down because you're not maintaining the property.
And to finance in condominiums is a headache and a half, even more. Yeah. So if you're living there and you want to sell, unless you have a cash buyer, it's going to be almost impossible to sell to anybody because no banks want to finance those properties that have all those issues, special assessments.
Technically, we have maintenance.
Yes.
So
but
we
it
do have an outlet for that.
For non-warrantable condos.
Yes.
But not everybody
and
qualifies
it's a great
for
bank,
that.
by the way. So
I know that dealing with associations could be hell.
Yes.
You know, they don't respond. They take 30 days.
They charge.
I have one right now.
They charge a bunch of fees, etc. Tell me a little bit about your experience dealing with a local association companies.
We're inconveniencing them,
and give them some advice on how they can get better.
I have to be honest.
Find a townhouse and or single family residence.
Yeah.
No, for the association companies that are managing properties, man. Like
we're not your enemy, okay? We're coming as a friend to give you money or bring you a new homeowner, you know. And they make them. They
feel there's a lack of professionalism.
For example, I did one of my good friends. He's a police officer, and he was buying a house that has an association of townhouses. It wasn't a condo, and he had to submit paperwork, background check, credit, everything. And every time he would submit something, they come back and be like, "Oh, I need this." He submitted. Oh, but I need this. He's like, can you just send me an email and ask me for everything in one shot? He's like, I'm a police officer. Like, I have whatever checks you need, I'll give it to you, but just ask me. So the last item he sent in, he's like, no, now they're going to ask me for my blood sample. That's all I'm waiting for. And we would joke about it. And his sergeant is the president of that association. So imagínate.
You know what's crazy? My girl had bought a property up north. And she finds out this year that she needs to pay, you know, the 2-3 month deposit that you give?
That the tenant gives
you, right? That needs to then be given to the association now.
Why?
And the association needs to keep 1 month in case the person breaks anything, the lease that, since she's using it as an investment, in case they lease anything out. And it was in her contract with the association.
That's crazy.
And they asked her, hey, you never paid your deposit. And she bought it like 3 years ago. You never put in your deposit. Oh, I had no idea. No, it wasn't your contract. We just never collected it. So now we're going to collect it.
Wow.
Wild.
She had to pay.
So going back to the HOA topic. So, I just had a loan closed for a condo. The individual was able to buy the condo with only 3% down, which a lot of the times it's unheard of, right?
How much?
It was a $425,000 condo. Believe it or not, their cash to close. We did get a little bit of a seller credit. With less than $15,000, they were able to buy a $425,000 condo in a great location in Miami. We ran into an issue with the HOA board. So HOA requirements for any, I guess, conventional loan is kind of three-pronged. It has, 1, their budget, right? 2, the condo questionnaire. And then 3, it's the master insurance. In this case, the master insurance had low fidelity coverage. And I could go into that, but let's avoid that. But low fidelity coverage, and without the X amount required for fidelity coverage, the conventional loan guidelines will not give that condo an approval, right? Meaning that the borrower would have to go through a limited review, and instead of doing 3% down, they would have to bring in a lot more cash to the table, which, again, not a lot of people have that option. So I had to personally go to the HOA office and explain to them, guys, I know you guys are trying to save a couple dollars here and there, right? But by cutting the coverage and not having the sufficient coverage you need, you're limiting your buyer pool. And at the same time, by limiting your buyer pool, you're essentially dropping the value of your homes, right? Because if you have less people that can buy a property, right, you're going to ultimately lower the demand, right, and lower the price point. So a lot of the times it's just having that conversation, that honest. 100% they changed.
Oh wow, man, that's good. That's good work, bro. That's amazing, bro. I used to be that guy to go and hustle and go behind the association and stuff like that.
I remember.
Nobody does that.
Yeah, not a lot of people do that, but a lot of the times it's just sitting down and explaining to them, right? Like kind of big picture. Like
that's a good point.
If you don't do this, this is what's going to happen, right? So,
listen, I get a lot of people that I mean, for someone who's asking, and I know a lot of people wonder this stuff. You know, let's say what's the average price for a home right now? $750,000, $800,000.
Depends on where you're buying.
I would say minimum 500, depending the area, what you're looking for, et cetera, et cetera. Like. You know, 400 is doable, but
let's say a nice house, bro. A nice house, $700,000.
600.
Yeah, sure. 600 to 700,000.
All right, I work a regular job, bro. My wife is making $100,000. I'm making $100,000, right? How much money do I need to have saved in order to go into this venture and be able to buy a property? Regular credit,
700.
everything under control for like a $700,000 property.
Let's say good credit, going conventional.
Regular person,
5% down, 35 plus. You're looking at 50 to 55,000
grand.
all in keys to the house.
Worst case scenario.
Piece of the house.
And somebody a couple that makes 200,000 would qualify for that as long as they don't have 3 Lamborghinis, 2 boats, and stuff that we don't know about,
or a helicopter,
or a race boat, stuff like that. So the biggest thing.
Does that really happen?
Yes.
I mean,
That stuff on people like that.
Yes.
Oh yeah.
The thing is that people
a monthly payment. That was like $2,500.
they live
crazy.
outside their means.
I mean, I know a couple of banks that'll finance it for longer, lowering that payment. Yeah, I do.
Damn,
People live outside the means. The more money they make,
But
the
that's
more
a Miami
debts.
thing.
That's a Miami thing.
That's a U.S. thing.
It's a U.S.
I think
That's
it's more.
major-
I think it's more a Miami thing. To be honest
It's
with you,
even in California they're doing it.
the people are in a lot of debt, and you don't realize it until you actually pull the credit and you see it.
you
They're basically getting all the money that's coming in. It's all
right
going out.
Yeah, bro. After I bought my crib, bro, like I had a bunch of credit cards, and I used all my credit cards, maxed them all out to buy furniture. I had used everything to buy my crib, maxed them all out, bro. I got all those shits down, cut them all up. I don't have a credit card, bro.
Yeah, I have one credit card.
I don't
That's
have a
it.
credit card, bro. I was like, fuck that.
And that's
so I had Diablo. You're
I
out
mean,
there.
you're paying 30%
Nowadays-
interest on that money anyway.
Yeah. Now at this age, I'm a little bit more mature, But at that age, it was like tajetazo.
Yeah, I'll worry about it later.
Yeah, you're going out at night to a nice dinner, boom,
Yeah.
and you get caught up in that fast, bro. And I've tried to teach my daughter that, like she has no credit card, man. Like she has a little credit card that under her name to help her out with credit and stuff, but that she manages herself. No, you gotta use the bank card, debit card, and you understand because it's easy to get into that,
Yeah.
Especially once you get out of college, the first thing you do.
The first thing that you walk through any type of
Yep.
school campus, they're like, "Yo, you want a credit card with a
You got
T-shirt?"
a ton of them.
Yes,
a ton of them in
Yes.
the mail.
We worked at Wells Fargo in FIU, and we would tie in an account with a student card, and sometimes they'll say, "Hey, if you want to apply, you can." So
They give you $500, $2,000,
something,
$1,000,
and they'll get it. And they'll get
Swag,
approved,
yeah.
and they're 18, 17, 18 years old,
they have
and they
no
don't know
idea.
how that
They don't
works.
care.
I mean, we're mortgage professionals, obviously, but we're also therapists a lot of times, and we have to sit down with clients, and we have to have those hard conversations that no one else is having. I had a client the other day tell me, "Manny, you know me better than my family," and the reason that is because we're having those difficult conversations and letting them know, all right, you're trying to buy this house, right? Yes, the bank's going to approve you, right? But can you really afford it, right?
But you know what? To your point, there's a human side to what you guys do, and that's probably the most important part because people share a lot of sensitive information
Absolutely.
with you guys.
Yes.
Someone's life,
More information. Yeah, we know more information about that consumer than their family member.
than their family.
Yeah, I could probably tell you a story. 2 weeks ago, I did a closing where it's a lady that she lives in the property. It was inherited from her father. Father passed away September of 2023, and she's been paying the mortgage, but the mortgage, it was still under her father's name. She went through probate and everything. Title was under her name, so she, on paper, she's the owner, but the mortgage company thought that he was still making payments. She didn't have a year of work, so I had to find a loan for her to be able to refinance it. I found a loan for her, and she's saving over $1,000 a month because they put a forced place insurance. Now that she's on the mortgage, she was able to find a much cheaper insurance. She took some cash out to have for savings, a lot of things. And now we would speak every day. And after we got the CTC, she closed, she signed. She texted me the next day. She's like, "Oh, it feels weird not to talk to you when we spoken every single day throughout this process." She's like, "So how's your day?" And we still talk, and we closed the loan 2 weeks ago.
Nah, man, but that's important because like what you were saying earlier, sometimes you gotta give people hard news, but sometimes you give people some of the best news in their life.
Oh,
Yes.
Like that clear to close. Tell me how that clear to close feels, man.
You
Like,
know how
I
it
know,
feels.
it feels great, bro. Let's go. You're happy, man. It's you see people crying and stuff there, man.
Yeah.
That's the most rewarding part of the
That's
the
for
job.
sure, for sure, for sure, for sure. There's nothing better than those 3 words, man. Clear to close.
Yeah, it's an American dream, man.
Yeah.
Owning a piece
It's really a tagline, bro. The mortgage group, clear to close, bro.
Well,
that.
ours is the art in lending. We put the art in
I like
lending.
that, bro. I like that.
It's an art to be able to do what we do. Let me tell you.
All right, so we tapped in this a little bit in the beginning, but I wanted to ask you straight out: are prices in Miami, our home prices, going to go down? What do you guys see in the next 24 months? What do you guys think?
Home prices, it's already happening behind the scenes. More so up north, it's more apparent. I've been sending some comps to my realtor partners, and I'd repeated a property or two, and she indicated that, the price went down. I was like, yeah, there's a correction coming. It's just, it's not on the forefront yet.
There'll be price cuts.
Yeah, but in Miami, it'll be slower to have prices come down.
What I have seen to add to that is there's a lot more sellers are willing to give seller credits now.
Properties are sitting longer. Too.
Yeah, so they're more willing to give that client $5,000, $6,000, $7,000 for closing cost credit that they probably weren't doing before, because like Manny pointed out earlier, it's a buyer's market now. But before, when it was a seller's market, you either give them what they asked for, or you tell them, hey, I'll give you $5,000 or $10,000 over appraisal, and if you didn't do that, they wouldn't even look at your offer. Now they're taking offers sometimes lower than what they're asking for, and they're willing to give price cuts. So a lot of clients come asking, DPA programs are good, but they give you a higher rate. You're paying that on a
DPA is.
Down payment assistance. Sorry.
Oh wow.
Yeah, they come in with either a higher rate, or you're paying it second to your mortgage, or you pay that money back if you refinance or sell the property. So a lot of people think that's free money. It's not. You're gonna pay that back one way or another.
It's a small payment,
but it's a payment.
I have no idea, but like if somebody's interested in looking for a down payment assistance program, where do they go? How does it work?
So
the mortgage group.
Okay. And how does it work? Like what do you usually get? Is there an amount?
660 is the minimum credit score.
Okay.
Then there's grants, and then there's bonds. So the grants, free money. The bonds are small payments. Some are income
driven. Yeah, so if you make more than a certain amount, you can't get to.
Qualify.
For example, the couple that you just told us, $100,000. I want to buy something. They're not gonna qualify because they make too much money.
How much is it, like the minimum?
So
what's
The medium income is
35,000 or
56.
So I'm glad that you brought that up. And one of the most, I guess, notorious down payment assistance programs in the last few years is called Hometown Heroes, right? So Hometown Heroes was a big push by Ron DeSantis, where initially it was a program that was built for first responders during the COVID years. And when I say first responders, it was also including nurses, so anyone that was essentially in the front lines, and it was making homeownership more affordable for them. Those funds flew. Initially, there was $100 million. They re-injected another $100 million into that
third variation.
in that program. And we have a really good relationship with the director of Florida Housing. And the word on the street is sometime this summer they're going to re-inject more funds into that program. We're not super sure of how the new, I guess, guidelines will look, but how they have looked before is. I know we mentioned some income limits. Now they're very loose on those. So you could actually be making a lot of money and still qualify for a down payment assistance. And how it was working was the state of Florida would give you 5% of the loan amount, right? So if your loan amount was $500,000, you get $25,000, right? And that $25,000 had no interest, had no monthly payment. All the state of Florida would essentially say is, hey, when you refinance or sell this house, just give us our money back. And that's the closest thing to free money that you can get, right? Because if you need a little bit of assistance getting your foot in the door and buying your first property, this is the program for you, right? So,
but it goes so fast. The second variation came out in July of last year, and it was done by like August 15th. Like people reserve the funds
because it's for anybody in Florida. So if you work for a company in Florida, that's basically it. So if you own your own business, so it's honestly the best DPA program that's come out in a very long time. Like that, that's once it comes out again this year, it's gonna go by in probably less than 2 months.
They removed the first responder requirement. So like Brian mentioned,
everyone.
As long as you could actually even be self-employed, as long as you are in the state of Florida, you would qualify for this program. And like Cam mentioned, the funds fly. So what I've been telling and what we've been telling our borrowers is, if you are in a place where you think you want to take advantage of this, the conversation has to start right now, right? Because when the time comes and they re-inject funds into this program, they're going to fly. So you got to be ready to go.
Yeah, that's incredible. And how long do you think that'll last? Like, is this like once it's done, it's done?
It's gonna.
Well, there's a third time they bring it out, so maybe they'll do it now and then they'll do it again, but that won't come out till next year, another year later. So when it's ready, you got to take advantage of it.
Listen, so I wanted you touched on something earlier about realtor partners, right? Obviously, I met Brian when I was a realtor. I think you guys provide great customer service, and you guys are very articulate in what you know. But for those realtors out there who maybe don't have a mortgage partner, and I think it's crucial for a lot of the new realtors that are coming in, they're just getting licensed now. The market's still hot down here in Miami, and it's a great profession. People talk shit about it, bro. It's a great profession if you dedicate yourself to it. Yeah. If you're a good realtor, you can make some good money. I want you to tell them why it's a good option to work with you guys.
We answer our phones. We are transparent.
That's like the best response.
It is. It's not a response. It's just who we are. It's in our DNA. It's our baseline. We answer the phone because we know that what's ringing in is money, a potential of money on the other end. So we want to deliver a clear to close for the consumer and make him happy. So it's important that we build relationships with realtor partners that have the same mindset as we do. So if you don't have a good relationship with your existing broker or lender, give us a shot. There's no harm, no foul, right?
A lot of people just they'll just tell the client, I mean, hey, just go apply here at the bank, and they don't have no idea that there's people like you guys,
Well, that's why we're doing these podcasts for more recognition.
Thankfully, we have referral partners and we have realtors that we work with that continually send us business because of the way we are.
Yeah.
We wouldn't be here. We would not have the mortgage group if we didn't have the relationships we do with some people. Like when you and I started, we were friends. We played flag football, but you know that I take my job very seriously, and I've always take care of my clients, and that's always been. We're dependable. You call us and we're gonna be there.
Yeah, you guys are very knowledgeable too, man. Like talking to you here, I soak all this information up.
Yeah, and as a realtor partner, like what you want to do is potentially add more value to your clients, right? And that's what we're here for, right? We're here as an added tool in your tool belt, right? And not only do we bring transparency and communication, like you mentioned, we bring a lot of knowledge, creativity, where a lot of people can do certain things we can, right? And ultimately, there's never a no. It's maybe not a yes immediately, right? But it's how we get to that yes, right?
That's a good point. I'm sure there's a lot of realtors out there right now that have clients that have been denied and they didn't get a pre-approval letter for whatever reason. And if they go to you guys might have an option where you could get them approved or pre-approved at least.
Yeah, and if it's not something that's immediate, we're going to be transparent about it. We're going to be like, listen, here are the roadblocks. How do we overcome these roadblocks, right? And here are the steps to overcome them, right? So it's about having a fluid conversation. A lot of the times we meet someone that's looking to buy a home, and it's not like they're going to buy a home tomorrow, right? It could take a couple months. Sometimes it takes up to a year. But it's about being transparent and letting them know the reality of the situation and what it needs to get them to there.
My most recent, I think, realtor partner that I have, it was a presentation that Cam and I did when we were in our previous company. We went in, we did a presentation for a small realtor office, and one of them reached out to me on the side and said, hey, look, I want to send you some clients. I want to see how you are. I did one deal for her, closed the deal, and she sends me everybody. She recently left that office, contacted me again. I hadn't spoken to her in months because she was kind of like transitioning. She had a baby as well, and she called me. She said, hey, I'm with another company. I want to do a first-time home buyer seminar. I want you to do it. I didn't call anybody else. You're my guy. You're going to do it for me. Went ahead, and obviously I'm doing that with her. And ever since she started reaching out to me, she's been calling me almost every day to do conferences with her clients, et cetera, et cetera. She's even on Sundays, she's like, hey, can you do a call today at 4 or 5 o'clock? I said, yeah, of course I'll do it.
But I was gonna on to that point, any real estate offices out there, if they want you guys to come in and do like a little class setup, you guys don't
more than happy.
All day, every day, baby.
Okay,
all day.
good.
Yes.
I don't know.
I take pride in doing that. I actually like doing that as often as we are allowed to.
Yeah. I mean, as long as our schedules align, but obviously we'll
But you get. I guess the question is, how often do people request that from you? Often or
often enough? Yeah.
Wow, that's impressive.
Yeah, and I think that's the fun part about our business is the education standpoint, right? And like informing people and actually educating them on, listen, like you have a lot of things available to you. This is what it takes.
We do a Q&A too. It's like we do a presentation. We stop. Hey, any questions? And then those realtors have, I have a client right now. I have a client right now who's going through this. What can you do?
Those are the best. Those are the best when you have people engaging and bringing live scenarios.
And it's not always with realtor offices. The other day we actually went to the gym and we had a presentation with all the gym employees. And I'm sure they took a lot of knowledge from that, and they haven't stopped reaching out to us, asking us questions. So it's not only with realtors, but any local businesses, and if you want your employees to thrive and to be knowledgeable and to be able to use the paychecks that you're giving them as a business owner to plant their roots down, we're all obviously there to help as well.
Do you guys partner in any way with title companies?
Yeah.
Sure.
You do?
Yeah.
All the time.
But do you guys share referrals or not? I mean, they're already.
I send clients. Yeah.
It goes.
Even CPAs. I have a CPA that called me. One of my deals right now is because of a CPA where I've called her to help me for letters that I need on certain loans. Hey, I need you to certify the employment for this person. No problem. She'll write me the letter. She called me. She said, hey, I have a client that wants to buy. And I have a deal because of that. CPA.
That's incredible.
Divorce attorneys, financial planners, anyone that you could think of. There's a lot of synergy back and forth. And we know you're in a BNI chapter. We're all in different BNI chapters.
It's great, man. People, it takes time and it takes work,
Yeah.
But
you have to be
great.
you have to be present.
You have to be present. Yeah, you have to show up, man. But like anything else in life, listen. What are any misconceptions that people may have about your industry?
I need to put 20% down to buy a house. That's the most common one. I just had a conversation with a client Monday that wanted to buy a property as his new primary one. Now he's like, I need 20%. I'm like, no, you don't. And he was like, he's ecstatic that I saved him $25,000 because I showed him other options.
Because you can come in with 5%, 3.5%.
Yeah.
Yeah, some people.
What is the FHA max now?
It depends on the county.
Miami-Dade 654.
And conventional is already up to 806.
Conventional 5% is up to 806?
No, loan amount 806. So as long as the loan amount is 806, the purchase price can be anything over that as long as you bring it down to 806.
You can do
so if you're like 815 and you put 5% down, obviously you're going to be under the 806. But every year the loan amounts have been going up.
I mean, that opens up to a lot more people getting approved.
Well,
higher prices on homes, too, that you were talking about.
On homes, yeah. That makes sense. I didn't think about that.
Yeah, the loan amounts go up, the prices go up, too.
Yeah.
So.
Yeah, there's more money out there. You know?
Yep.
Yeah, give me a second here. Which one else did I have here? Okay, this is an important one, bro. And I know everyone, I think we talked about it last time, and this is just, you guys have a client. For the moment, Manny has mentioned it a couple of times, they're not approved, you know? You put them on a roadmap. What is the best way for someone to adjust or fix or improve their credit rating?
Oh, why are you looking at me? You guys can talk.
well,
it's simple. Just pay the bills.
But is there any? I get that. Everybody knows that too.
Yes.
But is there anything that can fast track me if I'm in the process of buying a home? Do you guys help with that? How does that work? Like, is fixing your credit real, or is it like a gimmick?
Do the credit expert thing.
We have a bunch of tools and resources in our like system that allows us to fix your credit, right? A lot of people contact me, Manny, I need someone that could repair my credit.
Correct.
A lot of times it's not necessary. It's a lot more simple than a lot of people make it out to seem, right? So we have resources available to us where, with not 100% certainty, but a lot of times 98, 99%, regardless of the credit bureau, they'll give us a step-by-step guide. For example, let's say someone is at a 680 credit score and we want to get them up to like 700, right? We'll run something that's called a credit simulator, and it'll tell us, hey, have them pay down their credit card from $5,000 to $2,500, and then we run something that's called a rapid rescore. And at that point, we wouldn't even have to rerun their credit. We would submit documentation to prove that they did what they asked us for, and then all of a sudden, within a couple of days, their credit score is now at a higher number, right? So it's a lot easier. There's a lot of misconceptions with credit repair and boosting your credit.
Yep.
And everyone's situation is a little bit differently, but that's what we're here for. We're here to give them that guidance.
And to add to that, a lot of people think that it'll say, "Oh, I have to pay my credit card down to zero." You don't. So some of the instructions that we get from the credit expert that we use states, just bring down your balance to this amount. That's it. And that'll bring your credit score up 15, 20 points. So it's just a matter of your balance is on there. Not necessarily you have to pay it at zero.
Like below your credit,
the 30%.
30% below.
So I have a file that I've been incubating for the last 8 months.
Incubating.
Yeah.
No, it's true. So the client called me. He was at a 590. I've gotten him up to 654. And I just started the loan last night. But it's a probate issue. It's taken a long time, but we're ready to start. And he called. And I ran his credit, and I was like, okay, we're going to need to do the what if scenario. And I had him pay everything down, and we pulled credit in like 2 or 3 weeks. Boom. And it worked.
Are you guys like, I mean, maybe this is like a personal question, but are you guys like ever like judgmental? Like, you see someone's credit, you're like,
look,
like what the fuck, bro? Or...
People are coming to us to make the biggest purchase. If we're judgmental, then we're doing a disservice to our clients. Yeah. So nobody's perfect. We're all human, right?
We've all had our
gone through it, but we're trying to navigate and help you get back to a more realistic and a much better credit score. Yeah. Nobody wants to be a 300. No one wants to be.
There's no way you can be a 300.
You can.
I have the lowest of 500.
No, I've seen lower.
Yeah.
What's the lowest credit score you've ever gotten someone approved?
Or 10.
No fucking way.
Not approved.
Not approved. I've seen.
I've seen 440. I've seen 440.
440 processed of
No. When we run credit, it comes.
No, I got you. What's the lowest credit score you ever processed?
I've done 590.
I did a
585.
I did a 537.
That's like that's a good.
That's an intense.
But
that's not an easy loan.
Yeah, so when you're between.
How did you get approved? How did you guys?
Well, FHA lets you go down
to
but
520.
What Brian will now tell you.
Yeah, it's there's a lot of restrictions.
You gotta get a physical.
Yeah,
it's a
restrictions.
No, not. It's a manual underwrite.
Manual underwrite, and they restrict the DTI. They ask you for reserves.
There's
a lot more stuff you need to present. It's doable, but it is not easy.
See the notepad? It's about 3 notepads of guidelines that you have to follow. Bro. Yeah,
it was not an easy one, but it got done. So that's what matters.
All right, I wanted to ask you about this. How crucial, or what is it you guys usually see going around the whole, mortgage process, and getting approval, when it comes down to the inspection of a home? How crucial is the inspection of a home?
It's
do you see stuff that you're like it just crushes the deal, and how often do you see things like that?
You want to take this?
I'll take this one.
Go ahead, Manny. You take this one.
So inspection is super crucial in a real estate transaction, and a lot of the times
it's a must.
Let me get out of the shot for you. Go ahead, Manny. Take the shot. Take the shot.
He has like a radio voice, bro.
Yeah, he does.
He has a radio voice.
He has a face for radio.
No,
just kidding, Manny.
So believe it or not, an inspection isn't necessary, and from the financing part of it, we're not involved whatsoever, right? But this is without saying that everyone that's buying a home should be doing an inspection on the property. A lot of the times in a real estate contract, you have something that's called an inspection contingency, right? It's typically around a week or so after you get under contract. What that's there for is to give the buyer protection in case you do the inspection if something comes up. I had a borrower the other day that they sent an inspector out to the property. They noticed not only a couple cracked tiles, they noticed mold in the ceiling. There was a lot of things that were wrong with the property. Now, he still wanted to buy that property, and what that contingency in the contract and the inspection itself allowed him to do was renegotiate the terms of the deal, right? So in this example, they were buying a property for $500,000. Now they were able to actually go in there and ask for a 5% seller credit, which coincides with $25,000 back in your pocket, right? So the inspection is very crucial. At that point, once you're doing the inspection, you're already under contract, right? So this is all leverage on your end, right? So it's definitely something that...
Do you ever advise people, like, hey, listen, this inspection didn't come out that good, or it's just you kind of just stay out the way and that's it,
Yeah, it's something we stay out of the way because we're doing the lending side of aspects.
Yeah, the more important to us is the appraisal. But that's where
and wait, so to that point, the appraisal is done after the inspection.
Yes.
Correct.
Right?
As long as when they get the inspection, they agree, okay, we're willing to move
move forward.
No house is perfect. Every house is going to have its issues. So it's a matter of, are you willing to fix whatever issues that house has?
Is the appraisal, you guys send somebody out, or you're
It's a third party?
Third party.
Yeah.
So you're blind to that.
We're
not blind, but
we're not allowed to even speak to the appraiser.
Yeah. So
we know, we get updates. Hey, appraiser accepted the order. It's going to be done on this date. Once it's done, you'll get the report by this date. That's all we know.
Do you see is the appraisal consistent with like a lot of the systems you use, the AVMs and stuff like that?
So the appraisal itself is sent by a third party, like I mentioned, and a lot of the times they do the same kind of legwork that the inspector does for the inspection, but now they're adding a lot of back office stuff with recent comps and stuff like that, right?
Yeah.
So a lot of the times those AVMs are pulling from those recent comps as well, so it's typically like
pretty close.
Yeah, because I've heard that AI now is going to be like can do these
I want
appraisals quick.
I want to say two things. So the inspection, you're doing the inspection on the home and you're checking the vital organs of the home, right? The 4 arteries: electrical, plumbing, roof, and AC. So it's important to do that and hire a third party independent person that's outside of the real
transaction.
Yes, just so you get a
non-biased
opinion.
Sorry.
No, it's okay. And then the appraisal is absolutely important because it's telling you what the home is worth and what the bank was willing to lend. And all of the information that's derived from the appraisal is based off of comps trading in the area that it's between 1 to 3 miles out from the property. They're looking at the age, the square footage under air, bedroom count, lot size. It's taking in a lot of different factors.
Do you ever have a situation where someone's appraisal comes down like real low or something, and you're like, hey, I'm not buying this?
Yeah, but the rules and guidelines are changing for that. FHA just now discontinued the borrower being able to make a request for reconsideration of value. So when the value comes in, you have three options: walk away from the deal, renegotiate, or eat it and pay the difference.
If you really want that house.
Yeah.
Like I had one that I closed recently for a friend of mine. 589. Appraisal came in at 550, so that's a $49,000 difference. $43,000. Well, when they got on the contract, the realtor and himself knew appraisal was going to be between 550 and 560. They were already aware. So when they came in, told the seller, "Hey, look, we told you from the beginning. Here it is, 550." They negotiated down to 550, and he took it. But it was already kind of preemptive. They already told them, "Hey, the comps don't match this."
You're probably going to ask, "Can you do a second appraisal?" And that's going to be a no, because you can't shop around for value.
Correct.
That's another thing.
Once that appraisal comes in, you could do a reconsideration of value, like Cam said. But that is,
and I heard it stays in the system for like 6 months.
That's
no,
for
that's
FHA.
FHA.
That's FHA.
Yeah, it's tied to the property, not to the consumer.
But that reconsideration of value will process it for you, but 9 out of 10 times the value does not change. It's it's very rare the appraiser changes the value.
Yeah, and
the appraiser doesn't want to admit fault. Go.
And even though sometimes the appraisal does come in short, it could be the opposite. Sometimes the appraisal could come over the value that you're paying on the property. So I had a client just recently that purchased a home in the Keys, and the appraisal came in $30,000 over the contract price, meaning that they're walking in, getting the keys to the property, and they already have $30,000 in their essentially pocket, right, in terms of equity. So
I think there's been a lot of noise, especially on social media. This is one of my last questions. I think there's been a lot of noise, especially on social media, where you see people that graduate college. You go, you get married, you're 25, 26 years old. Okay, is the American dream still alive? Kind of regular couple making, whatever, average salary, go out, at least in Miami, and buy a home and raise a good family.
I defer to these two.
100%. So it's not necessarily about how much you make, it's about how much you keep, right? So the bank's math is very, very simple. It's a lot of times black and white. It's how much comes in and how much goes out, right? So if you're fiscally responsible and you know how to manage your money and you keep your liabilities to a minimum and you're not getting that Lambo, that boat, or whatever, right?
Helicopter, tank,
or the ATV,
Porsche, BMW.
So as long as the math makes sense and you're being conservative when you can be, right? I'm not saying you can't have a car or you can't have credit cards, but you live within your means, it's 100% doable, right? Okay. When whoever says otherwise...
What's the average age you see of someone getting their first home right now, more or less? 35 years old?
I would say late 20s, early 30s.
Late 20s?
Yeah, somebody, like he said, physically responsible, kind of already is preparing themselves for home buying. I took a call yesterday from a realtor, a friend of his. He wants to buy. He's a pilot, 24 years old, young guy, making over $100,000 a year, and he wants to buy his first property. But he told me specifically, I don't want to pay more than $3,000 a month. That's it. So he's already knows that. I told him, based on the information you're giving me, you can qualify for more than that. But I always tell my clients, just because I tell you this is your max does not mean this is what you have to buy. You buy what you're comfortable paying monthly. So he already knows, I don't want to pass $3,000. So I said, okay, so your purchase price comes down to you.
Yeah.
So,
I think I asked this last time, but how often do you see people, and what advice do you have for people when they get asked, let me borrow your credit? Whether it be for your son, for your daughter, for your sister, for your mother, for whatever. How should people approach a family member asking them, can I borrow your credit?
I mean, I it's a
touchy situation.
It's a slippery slope, right? Depends on who you're letting borrow and if they're fiscally responsible, like Manny said. But, I mean, it's very prevalent in Miami. A lot of family members are lending credit to other family members for tanks and helicopters and Lambos and boats and Beamers and Porsches. But look, if it's getting paid, it's getting paid, and if we can document it that it's being paid correctly, it's not going to go against your debt to income ratio. So it's really
so. But give me a short answer. So I get asked to borrow my credit. What do I say?
Don't do it.
If you don't have to, yes. Yeah. There's ways around it, but
do you see people get surprised that like they're signing up? And, I didn't know I had that.
Well, yeah. Well, I interview the client to try and preserve their credit. I tell them, hey, you got to be honest with me what debts you have. So what do you have? Oh, I have one car. I have this. Okay, perfect. Based on what you're telling me is what it is. But when I pull your credit is when I'll know for real. So if you are forgetting anything, the number I'm giving you right now is going to change. So they're aware of that. Sometimes I pull credit and two other cars pop up. I say, oh, I didn't know I had these two cars. That's my daughter and that's my mom, whatever. And I have their cars. I'm like, okay, now that changes a lot because car payments are not.
What's the average car payment you see?
Unfortunately, I say like $800
no
on average.
Way.
Is what I'm saying.
$1,200.
How?
It's Kia, Hyundai type of cars. Yes, I ask them like, what is this $1,200 payment? And they're like, oh, that's my Telluride or whatever.
Or a Toyota.
Car,
I think the cheapest I've seen is probably $480, $530, something.
Car rates have gone up.
Yeah,
and the rates on cars have gone up
too.
So.
Tacking 30, 40, 50 grand at a 5-year clip at 8-9%, the maths, it's going to be there.
And it's unfortunate because so many industries are heavily regulated, but I feel like that car industry and the car lending industry, you can
buy a car with no pay stubs. There's no
they don't ask you for any type of income proof. They tell you what do you make. You can say whatever you want, and once they pull your credit, if your credit's good,
well, it's like a repo.
Yeah, exactly. But they can repo your house. It's called foreclosure, and it's a whole different process.
But now when you're homeowner, when it's homestead exemption,
it's
a gray area.
Yeah, it's a gray area.
Yes.
Oh, I wasn't aware of that. I thought that was like a no. Like they can't foreclose.
If you're not making your payment, they're gonna take your house. It doesn't matter what you homestead. HOAs actually jump over a mortgage.
That's true.
And county.
Listen, what do you guys think about this? Ron DeSantis wanting to take out property taxes.
Oh,
give us some feedback.
I'm glad you brought that up.
That would be absolutely great.
How would that change the market?
Oh my god! The influx of buyers now, because a lot of the times people don't qualify due to taxes.
The taxes that you just
that I just said,
16,000.
If you take that off, that's over $1,000 a month that would be removed from that client. They would qualify for so much more.
Yeah,
it changes the aspect.
Imagine if you're buying a $500,000 home, you should be expecting anywhere between $10,000 to $12,000 on an annual basis for taxes, right? Assume that you're an average person, and let's say you're a married couple, and combined you guys make $150,000, $200,000, right? What does $10,000 to $15,000 do for you on an annual basis? It's a lot, right? Now, I know we're in very preliminary talks on this, and I think it personally would be great, right? But we need to map it out and kind of figure out, because again, property taxes are a big income source for our local community. Yeah. Now, where's that money
going to go? Yeah,
where's that going to be bridged? Yeah.
But what are the chances you guys think that this actually gets passed?
I don't think in the short term it's something that's feasible. Now, that doesn't mean that we can't look into dropping property taxes a little bit, right? Year over year, if you have your homestead exemption placed on your property taxes essentially could really only go up 3% year over year. So if we start seeing decreases there, then I think that within itself is going to be a major boost,
What's
right?
What's the property tax right now for Miami-Dade or for Florida?
It varies by community, right? And a lot of the times you have a percentage that goes to waste, a percentage that goes to school, right?
I get this green and orange document or something, red document, ad valorem. What it means, bro.
It all depends on the county and where specifically your property is. But yeah, in the short term, I don't think it's something that's going to happen overnight. But if we could start little by little, at least lowering the cost, right? And because, as you mentioned, home prices continue to go up, right? And with that, our property taxes go up, right? So if we could at least have it stagnant or kind of see some sort of decrease, it'll go
That'll be amazing, long way. Man. That'll open up home ownership for a lot of people.
And what DeSantis said is very true. It's like, let's say you bought a house,
you never own it.
You spent all this time paying it off, and now you're finally free and clear.
You're still paying property.
But then on a yearly basis, you have to write out a pretty big check, right? So do you really own it?
My grandmother's had her house for over 40 years. It's paid off already, thankfully. Retired. My grandma doesn't make... She just gets Social Security, but she has efficiencies that pay her on a month, and she's like, I need that money so I can pay the taxes on this property every year. Yeah. Because if not, how am I going to pay the taxes? Because what she makes in Social Security is not going to be enough to pay the taxes at the end of the year. Right. So people like that are retired, that have lived in that house, that are paid off. Thankfully, she doesn't have a mortgage. Imagine if she did have a mortgage. Yeah. It makes it hard. It's going to get to a point where those people would have to sell because they can't afford those taxes anymore. And that's that she's homestead paid off, and she still pays a good amount.
Yeah. Last question. I'll give you one answer from each of you. You got to tell me. It's a question we ask everybody. What is your favorite restaurant? Okay, you guys have
Easy.
one option. Each of you give me one, okay?
I'm going on Friday, so it's easy.
All right, I'll start
you're
with,
gonna take
we'll
my
go
answer.
from left to right. Brian, what's your favorite restaurant?
Coat.
Cote?
Cote.
Oh, they're amazing, bro.
I love
I went
that
for
place.
my girl's birthday.
I'm going there on Friday.
Listen, the customer service, shout out to them.
Excellent.
Absolutely.
The way they interact with you, the flow
Oh
of
my
people
God.
coming to your table
Yes.
and they just switch plates.
The decoration of the house,
Amazing.
of the restaurant. I mean,
phenomenal place. You're going with a family or?
with my girlfriend.
We're
It's our
all nice,
anniversary, so she already made
Oh,
the
bro, great
reservation.
spot, man. Cam.
Coat.
Oh, wow,
Yeah.
man. Again, damn.
Yeah.
2 for 3,
We
bro.
went for our birthday. Our birthdays already
We had
at
a
spot.
party.
There's no, I mean, it's a Michelin star.
Mission,
Yeah.
one of the only ones we
Michelin
have.
star
here.
place.
So for me, it's kind of a smaller spot. It's in Coconut Grove, Sapore di Mare. Oh
Oof,
my God, the
yeah.
pasta there is to die for. A little bit of some seafood in there as well.
You know, it's incredible to me because now that we ask this question to a lot of our guests, you start seeing commonalities across the board. Carlos Migoya, we had on, he was one of the people that said that one. Sapore di Mare. So, and you see like the real places that stand out in the community, man. Where
Yeah,
like
I
on top
watch-
of people's lists.
I
you know?
watch a lot of your
And it's not
Yes.
usually the fancy
ones.
places
More
where
the
celebrities go, bro.
the family.
It's usually like little
Low-key.
hidden things like that, and I appreciate that.
I found a hidden gem in Woodwood that I told Cam to go to. He went, so he can speak to about it. I don't know if you've been there, Sparrow, Italia.
I haven't been.
Winwood.
Good.
It's good.
I would highly recommend that place
Yeah.
if you haven't been.
When was coming back up now?
Winwood is.
I went to a Carbone Vino, the new one in
been good?
Coconut Grove. It was really good, man.
Yeah, I haven't
Really
been.
good. And it's different from the one in South Beach, so it's a little variety in the menu,
Yeah.
right? So, but it's good.
Yeah, there's a lot of good spots in Coconut Grove.
What's yours?
Damn.
What do
Because you go to a lot of places.
Damn,
All right,
yeah.
we're switching up the script here.
Damn, no one's asked me actually.
All right,
That's
so
crazy.
Eddie, what is your favorite restaurant right now in Miami?
Bro, right now, I'm probably gonna get hate from this, but maybe not. I have to say Mika. Mika and Coral Gables across the street, open. I've probably been like 7 times in the last like 30 days.
Wow.
Great lunch menu, great spot, great vibe. You can see, I saw Derek Jeter. You just see people hanging out. Affordable. It's nothing too crazy expensive. They have a great $38 lunch menu, man.
Shout out Mika.
Highly recommend going to Mika and check it out.
Cool.
All right.
Thanks for having
Always
us.
A pleasure, bro.
Thank you.
Thank you, man.
Always a pleasure.